Good morning and welcome to Equity Story Trade Watch, Friday, the 18th of August. And it's going to be much shorter today than yesterday. Apologies for that. Yesterday was Super Thursday. Less announcements this morning, obviously less to talk about, but still going to go through the same old routine of going through some of these announcements, see what happened last night. Before I go on, you've got the disclaimer in front of you. General advice only. Any stocks we talk about is going to be all about the technicals and fundamentals. All right, let's switch on to our screen so we can see exactly what actually happened last night. So pretty much another down day, right? Wasn't super exciting, unfortunately. So we just got the status quo at the moment of the market's a little bit weak. Excuse, I suppose, to take some profits. We had a pretty good run. Not surprising. Plus, of course, we've got a couple of issues going on at the moment. And one big one is China. More news you can see here. It's got US futures tumble as China's Evergrande files for bankruptcy in New York. And I think the S&P 500 futures were down 0.9 at the time of writing. So God knows how that's going to obviously pan out tonight. It just shows that there is definitely issues in China. So that's going to put a dampener on a lot of things. However, I think we had a okay start, as in pretty flat this morning, which is much better than we've seen the last couple of days. With the news on its on an economical front, I suppose there was a little bit of news out of the US yesterday, which I think just pointed to the fact that maybe the economy is moderating a bit in the US, which gives the Fed time to definitely pause the rate rises, right? So at least from that point of view, it's not too bad, but still it is probably, I don't know, when you think about it, we still don't know exactly how it's going to go. I think that, we're almost at the top of the rate rise cycle, and we're probably going to be now sort of high for longer, but we're not going to probably see the rates decrease anytime soon. That's from what I've been reading, what I've been actually seeing, and the commentary I've been hearing. But you just never know. Things can change. We've seen it all before, but for the moment, there's just lack of sort of good, positive vibes for the market where we can hang on to something and go with it. So it just looks like it's going to be fairly volatile for the next, like I said, 2 weeks, and we'll take it from there. So, just going through, the Chinese is the biggest worry for me. And if you're looking at here in Australia, how does it impact us? And again, I'm going to, probably repeat myself a few times. We are very, very intricately linked to China, especially with the commodity prices and so on. So if we go back to the commodity prices right now, it's still looking fairly weakish, I suppose, overall. I mean, iron ore is probably the one that's still holding on pretty well, which is nice to see. Copper's still going down. Gold's looking pretty weak. We talked about it yesterday. That looks definitely like a sell on the charts on the weekly, right? Crude is holding around the 80, was not too bad. Coal's still okayish. The one that's really the best standout of them all is uranium. Still had another little move up yesterday. So again, it's come back, swung nicely, back to 57. That 58 is probably the next target. So that's the only place I'm probably thinking looking all right, looking like it's going up. So from that point of view, you've got maybe one or two stories in there that you can maybe follow if it's still trending, and we'll have a look at them in a moment. But other than that, the base metals, not much happening, I must say. This week has been fairly poor all around. You can see tin down 8, zinc down 6, nickel down 4, aluminium down 2.5, and I think, like I said, copper. What was it? Copper here down 1, almost 2%. So the only positive we've got is iron ore. Still, maybe that's why BHP is having a little bit of a bounce towards the end of the week. But still, it looks like a sell on the weekly. But let's go. Okay, let's go move it to the chart. Let's have a look what's going on so we can go through and see some of these announcements and charts. So let me just put on the actual Reuters so you can see for yourself. And I've got BHP to start off with. Let's have a look at that. So you can see it hasn't had a great week, right? Remember, if you're just in this for the dividend, it's still okay. I don't have an issue with it. If you are trending this, I think that's a sell right there. For any reason, right? If you're trending this, it's definitely a sell. And let's have a look at BOE. And what's that going with that uranium price? Is that's looking okay still? Yeah, it's had a little bit of a comeback, but you know what? It's still decent. I mean, it's still holding the top part of that previous candle, which was a very, very strong candle. So hold still technically for next week on today's action. All right, so let's have a look. There's not many, like I said, not many announcements this morning, but we'll go through some of these things and see where they're at the moment. So last night we had PWH. I was a little bit worried with PWH, to be honest. First of all, it was trending under the trend line, so that wasn't a great, you know, I suppose a marker where we think the announcement will come in. But and when I saw the actual announcement yesterday, I'm thinking to myself, you know, it's not the best year for PWH, no doubt, but it's not bad. I mean, the thing is, it beat analyst expectations. That's probably the key here, because just purely on the numbers, you'd go fairly weak numbers, right? You've got growth of about 4%. I mean, that's probably, as you know, if you're looking for stories, if you're just flicking through, give me some growth. If you're using some sort of I don't know, software to pick out stories that are, you know, growing by 10% plus or whatever, this would not pop up on your radar, that's for sure, because it's growing at a slower cap. But like anything, you know, it is it has its years, it's had its good years and its sort of slower years. And that wasn't it. Let me just give another one. That was a better one here. This year, it's just been one of those years, right? You can see here. So the good news for me was the revenue. The revenue was the one that's really stood out for me. That's still very good revenue growth at 17%. It's the other stuff that, you know, go, the margins came down. You know, the profit is only 4%, earnings per share at 4%. So, you know, at the end of the day, it's fairly weak. And if, you know, when you look at the actual outlook, it's just not much in there to hold on, you know, you go to yourself, yes, it's going to come back to that 10% plus go. There's nothing in it to suggest that, but it is all about expectations. So investors, the funds out there, you know, we're probably expecting worse than this. So at least well done to them for coming out with a, you know, better than what some of these numbers suggested, which is good. So, and you put it through and see where it's actually trending, where it's actually trading on PE basis. It's on about 40 times, right? So it's not cheap. Growing at 4%, 40 times, it's just too expensive on a value level. So I'd certainly, from a value investor or a long-term investor, I'd love to pick it up cheaper. However, you know, it could be another one of those cases where it might never be cheap. It might be just one of those stocks that will always trade at 30, 40 times, right? Fair enough. If that happens, that's okay. Well, then the second thing we wanted to trend above the trend, the trend lines, right? Which is not quite there yet. So we just got to give it time, give it some leeway to see whether it can actually get over that 944, 45, and then we might look at it. So it's just too early for us. There's just not enough momentum there yet. We're probably going to have to give it 1 or 2 weeks. And then I know we've got volatility at the moment. At least it's nice, it's going up, but it just hasn't done enough. So that one for me, no, thank you. All right, let's look at another one. And I've got Coles. So they've come up with an announcement, and wasn't a great announcement because they're talking about delays to its distribution centers, right? Which a third party is working on. So, you know, an extra year's delay plus 50 to 70 million in extra costs. It's not brilliant. That's just unfortunate part, I suppose, of, you know, of trying to grow your business through implementing new technology, new distribution warehouses, and so on. But in this case, it just looks pretty poor, really. It looks really pretty poor where the actual company that's working on this, it's just really stuffed it up. So for me, that's not ideal for a big company like that to be not on top of these things. And you can see this as a really ugly candle. You know, is it temporary? Potentially, but if you're in this trending because maybe you bought it on this, then this is a definite sell. If you're in this for dividends, let's see if we can make a case, right? Let's go to monthly, see if this makes any sense. It still does, just right. So if you probably maybe use the black line right there, it still may be okay. But again, you know, when you come up with things like Coles, Woolies, and so on, is there better stocks out there than maybe you want to trend or at least invest into as a dividend play? Possibly. You know, it's obviously not great to look when they've come up with these sort of announcements and it's putting the pressure on the share price. So I think personally, if you look at the fundamentals, if you look at the chart, I'm thinking there's probably better things out there. However, like I said, technically still for just a dividend, it's the hold, but for just a trending story, definitely out. It's just looking pretty poor. That's a sell and a half. All right, let's move on to the next one. There's a couple of more stories, small little stories, but let's see what they are because I haven't seen them for some time. So if they look pretty bad, we're just not going to even talk about them. Let's have a look at EGG. No, pass. And let's look at 3PL, who came up with an okay number today. Let's have a look. Are they trending at all? 3PL, no, they're not. So it's another education play, but it's not doing quite well. So we'll pass on that one too. Let's see if there's any actually announcements post my earlier scan today that's maybe popped up in the last 20 minutes. And no, there isn't. So we're going to have a quick look at what's actually happening on the market. As you can see, there's a few stocks that are pushing up. PWH is the one that's really going okay this morning on that announcement. Good to see Goodman Group still going up. So let's have a look. Wow, look at that. That has to be on my list for talking about. And remember, we've got the Ask the Analyst today at 12. So please join me for that. That should be pretty good. But that's looking like a great looking chart. Great to see. How many times do I have to say, that we got to stick to the stories that keep delivering that good management that can deliver above the expectations. I mean, GMG has done that over and over again, even though it hasn't been the best performing chart over the last, few months, maybe periods. It wasn't because the company was bad. It was just the market fluctuations, right? You can see this is all market, nothing to do with the company whatsoever. It's just the market. However, you still have to respect the charts, get out on these sort of things and come back when it comes back over like there or like there, right? If you had to sell out here. But now this looks extremely good for next week. So, is there going to be some ray of light in this market at the moment with some of these charts? Possibly. I've got a few I've written down for us guys to discuss on Ask the Analyst. So please join me for that. But that looks good. I like it. I like it a lot. Good story to boot. So let's see what else is SRG. Another one that's been delivering well so far. It's still holding on. It's obviously not shooting the lights out, but it's still holding on. I'm interested to see what they're going to come up with for their result. Netwealth came out with their result a few days ago. Let's have a look at what they're doing. Yeah, not bad. Look, this is a good price action too. So could be something that we can discuss. MGH still going up. Let's have a look at that one. Yes, swinging. I said yesterday, is it done enough for me? And I wanted to see a little bit more, and it's doing a little bit more. If you can finish it maybe even higher today, that's just going to give me that more incentive to forget about the fundamentals maybe slightly and just think about it as a trade, take it to that 350, 360 maybe. So yeah, one to think about for sure. Let's see what else is in there. We talked about a few of these, sorry, at least drop suite 26.5. Let's have a look at that one. At least it's positive today. So that is, yeah, that's okay. It's still holding up there, which is okay. Nice bounce from that 24.5, which is nice. Rio again is bouncing a little bit like BHPs, but see how these commodity stocks are below trend. So if you are in this for a trading, you have to be out. Even if you didn't get out there, probably still get out. I mean, China could be just the beginning of its problems, right? We could just, Evergrande could be just the shot across the bow before the whole collapse. I mean, God knows what the Chinese are going to do next. I know they're talking about stimulus. I think everyone's talking about stimulus. They've got to do something out there to shock the system to get it back on track. But will it work? I mean, there's a lot of questions out there. There's a lot of risk out there. So, I'm seeing commodities is probably a place I don't want to be associated with at the moment. Okay, let's have a look if there's anything else that's potentially is okay. So SNL is another one we're doing okay with. I just want to have a look at the positives, and then we're going to have a quick look at the bottom of it. Let's have a look. So C1X has been very, very volatile. Look at that. It's just been up to 60, down to 49. Holy moly, very, very difficult to trade. Oh, satire, that's not good. Let's have a look at this one. What we're going to be doing at the end of the week. All right. Well, this is going to be interesting, isn't it? We have to talk about it on ATA to see what we're going to do here. So please join me. I mean, this is key for every investor out there. What we're going to do with these stories. It's still okay-ish, but if you had your stop loss at $3, if you finished at 290, you probably maybe have to get out if that was your strategy, of course. So let's discuss this. I'm intrigued to see how it's going to get closer to that end of the day. and what we're going to do with it. All right. Anyway, guys, it's been one of those weeks that it just hasn't been great. A lot of pressure on selling. Good to see. Let's have a look what the market's doing right now. Is it positive or is it negative? No, it's just gone into a negative at the moment. It's down 13 points, down 0.2. But yeah, it's just one of those weeks. And, is it continue next week? Like I said, 2 weeks maybe of more volatility, reporting season. And there's this China thing, possibly. So it's not going to be easy, but, we got to stick to our guns, stick to our trending lines, stick to our CTMs, and we should be okay through this reporting season. All right. Thanks so much for joining me. Join me at 12 for ATA. Have a great weekend. If you don't, see you again on Monday.